everyone. Today we'll be discussing about Wipro, which is one of the IT giants in India. So let's look at first something about the company. It has a market cap of around 2,20,000 crore with a return on capital employed of 17.7% and return on equity of 15.9%, which is decent, and it can be considered as an investment grade stock in a long time period horizon. Its price to earning ratio is 19.1, whereas the median is around 17. So according to price to earning ratio, which is here I have taken 10 years period. If I take max here, so the median is 17.5 only. It means it's standing very close to its median price range, and the highest price to earning ratio has gone to as high as 31.4. If we look at the quarterly sales is showing a little increasing trend. You can see operating profit margin is very consistent, so that's again an indication of a stable company. Of course, even stable companies sometimes goes through upheaval of cyclical recessionary trend that happens in an economy. Nothing goes up forever. It has to retrace. Profit booking will come from the top. And if we look at the sales figure, annual sales figure, you see it's consistently increasing, and operating profit margin is also very consistent. Now there are many stocks which has performed better than Wipro. So why we are discussing Wipro? Because of its undervaluation right now. So it can give a great opportunity for swing trade when we'll see in the technical analysis later on in this video that it's standing at a very important support as of this point right now. So net profit margin has also been consistently increasing. Now on the debt front, if we see, all right, we'll go to the borrowings. Borrowing has consistently increased, but that's not a problem. Why? Because we can see that the fixed assets are also consistently increasing, and its net profit, if we look at, is sufficient enough, all right, to take care of its debt. Now you can say, sir, this is only around 11,000 crore, but the debt on the company is right now 17,000. Look at the cash from operating activity it has right now. All right. So this is a cash rich company, and this cash can be used to clear off the debt, pay dividends to the shareholders, expand the company, and so on and so forth. Shareholding pattern is quite decent here, and you see recently slowly the FIIs in the March quarter they have increased, in the June quarter they have sold, and in the July quarter they have again increased. So there is no negative sign from the perspective of the FIIs, and also the DIIs. You can see they have increased because the estimated quarterly earning for Wipro was lower than what it should have been. So that's why some of the selling has happened from the top. But again, they have been consistently, slowly purchasing from the market. If we look at the analysis given by various fund houses, now remember this video is for educational purpose. Do your due diligence before you invest. As on 29 September 2023, the fundamentals of Wipro look strong, and hence it may be a good for long-term investment. Is Wipro undervalued or overvalued? As on September 2023, Wipro is undervalued based on estimates intrinsic value, and hence may be a good buying opportunity according to share valuation at this time. Now, if we see the fair value, that is median enterprise value by EBITDA, it is 402. Fair value median enterprise by sales model, it means whatever is the value divided by the sales, total sales, is showing 524, which is way higher than the current price. So if we even look at the median price and the sales value, you'll see it is showing even a higher price of 560. If I take an median of this, that is estimated median fair value, it is 524. So is Wipro trading at a premium or discount? As on September 2023 Wipro is trading at a discount of minus 23% based on the estimates of median intrinsic value. You see, consolidated debt to equity ratio is not a problem here. It is way lower than 1. Anything lower than 1 is very good here. Promoters have not pledged anything, which is a good thing. 0 shares. Revenue quarter on quarter has come down because the entire IT sector had taken a beating due to inflationary pressure and interest rate increase in the US and of course in India. But year on year, the the results of Wipro is not very bad. If we look at the current price versus the fair value, the red line, horizontal line, shows the current price and the fair value is shown here according to the sales, enterprise value by sales to be 524, and price by sales, it means whatever is the current price by sales, it comes to around 560. It means it both have a negative value. It means its way sales are way higher than what its value should have been. Its price is way lower than the sales that the companies are posting. So that's why it's trading at a discount here, which is shown minus 23%. If we look at the earnings and the estimates, earning per share, now the gray bar will show the estimates by various fund houses, and the wholesome blue bar shows the reported actual earnings. And you see the estimates most of the time are very close than the actual, and what the estimate has been forecast. Now current reported earning was 16.72 billion. In 2023 it has been estimated to be 22.14, then 24.77 2023 22.14 to 2024 financial year, it will be 24.77, then 26.64 and 27.40. So there is nothing on the side of estimates which can be considered as negative. If we look at the revenue, what was the again? The blue bar shows the actual revenue and the gray bar shows the estimates. Again, you will find a very closer proximity. Whatever was estimated, the company's revenue came very close to it. And if you look at the 2003 estimates, you see current reported was 904. Then in 2023 financial year, it will be estimated to be 933, then 1 trillion, then 1.06 and then 1.4. It means all the estimates given by the fund houses indicate a positive signal for Wipro. Now let's look at the technical part of it. You see, this is, and as I've told you, I have also made video with regard to Wipro, wherein previously we had booked swing profit around this zone only, around 10-12% of profit. I'll give the link to that video in the description. And right now again it has come down and it's consolidating around is its support zone. So if I draw a box over here, it is consolidating inside this box since it entered into this box on 22nd June, you can say 2022. Since then it is consolidating. Now there are two ways to approach this stock. First, wait for the breakout to happen from out of this box, that is above 450 level. You can take the trade, and if you do that, then the next resistance will come down somewhere here, somewhere over here. So if we calculate the profit, even if you wait, this is for risk averse swing traders, then you can expect a return of around 35%. All right, close to 35%. All right. Now, what if the price will retrace back here? The thing is, for value investors in a good stock, what I would do is that I'll wait for this bounce to happen and then enter the stock, so I can get a better risk reward if I enter when it bounces above this line, because that will give me a 52% return, right? Or if you are even more into value investing, but the thing is, we are not sure whether the price will touch this mark or not. But let's say you enter at this point or at this point and the stock takes a beating. Say for example, we have to be prepared about the risk as well. If you enter at this point and the stock takes a beating over here, 14%, then we can average a stock over here looking at the bounce from here, and we'll get even higher value. The average will be better off. Remember, average in a good stock is never wrong in the long run. Just consider that you are doing an SIP in a stock that is going to give you some returns, and of course it will pay you dividend for the time duration that you are holding. Now let's say I put a 200-day moving average. What you can see on a daily time frame, it is reacting to the 200-day moving average. So what we can do here is that the moment any daily candle closes above the 200-day moving average, we can consider it to be enough confirmation to buy, because we can see that immediate resistance is over here as well. So a breach above this mark can also be considered to be a bullish angle to this particular stock. On top of that, if suppose those who are afraid to enter at this point, what we can do is draw a trend line. Sorry, let me draw a trend line. We can connect this dot as well, right? So what you can do additionally is that wait for a break above this trend line. That will give me further added information, added confirmation that this stock is going into the bullish territory. Even if you want to hold it for a very short period of time, and if it breaks above this zone, then from this to the nearest resistance you can get a 5% return as well. Now if you look at the volume chart, you see whenever it comes down, a great spike happens from the down around this zone. Whenever it comes down, you see great spike happens around this zone. You see volume accumulation happens around this zone. So this zone is very important reacting zone for Wipro. But I don't know whether the stock will go down to this point or it will break out above. Tomorrow, how the market is going to react due to the US shutdown, we don't know. So we will wait for tomorrow. But those who have already purchased, they don't have to worry about it, that because it's an investment grade stock, and they can be ready for value buying. Those who have already purchased, they can be ready for value buying if the market, if the stock comes down here and again bounces up from here, if they can even get a better average, right? So, and in the end I would just say, please do like the video and subscribe to the channel. I'll keep coming up with this kind of value investing, because if you see here, why I'm calling value investing is that from its top it has fallen down by 52% and then it went back up. So still it is 44% down from its highest level, and companies like Wipro will create another high, if not in 2 months, not in 3 months, then definitely in 1 year time, 1.5 year time. So even if you just invest and forget into it, and if you hold till the time it goes up to its uh, initial high, and even if it happens in a couple of years, you are getting an 82% return on your investment. Let's call it 75% or 78% also, because we don't exactly know at what price we are going to take entry when the market opens tomorrow. So even if you're getting 75 76% over a period of 2 years, that is way higher than what the bank FD provides you, right? So we'll meet again with another stock recommendation. It's again, it's not actually a recommendation, it's for educational purpose. Do your own due diligence, and please do like and subscribe. the video. Thank you.